What's going on, guys? Welcome back to another video. Welcome back to my channel. I hope you guys are having a great week so far and a great week in the market. Today, as you probably saw from the title, I'm going to be talking about my market outlook for 2021, short term and kind of, mid/long term, whether I think the markets are going to be bullish or bearish. Make sure to like this video. It helps my channel out so much. I really appreciate it. Subscribe if you haven't already, and let's get into it. So I'm going to be breaking this video into basically three categories: some positive catalysts or factors that would be bull cases for the market, some kind of neutral factors or things to consider, and then some negative or bearish factors to consider that would be a bear case for the market. For the positive catalysts or the cases for a bull market throughout 2021, obviously things are starting to reopen. People are getting vaccinated. About 40% of the US is vaccinated at this point, which is absolutely amazing. Thank you, Biden. And so yeah, with all these vaccinations and economy reopening, there's going to be more consumer spending. Obviously, that's going to get the economy going, increase revenue for businesses, and make stock prices go up. So that is a very positive catalyst for the stock market this year, especially throughout the summer when people are off work, they're traveling, they're going to be spending more money. That is going to be good for the stocks, and it's definitely something to consider. Not only this, but Biden has a $2 trillion stimulus package plan, so that is a lot more money pouring into the economy. We are going to be talking about inflation and interest rates and the second part of the video, but for now, let's focus on the positives of that. In the short term, that is going to boost the economy and be good for spending, which will be great for stocks. Another small factor to consider is that historically, the first year of a Democratic president's term, the first year is often very strong for the markets. This is just something to consider, although this year is kind of an anomaly and pretty crazy. History does repeat itself pretty often, so that is something else to consider. Also, we are in Q2 of this year, starting in April, so about 10 days ago. So for the next few months, lots of earnings are going to be coming out for companies from 2020. And what this means is there's going to be lots of good news, lots of money pouring into the stock market, and this quarter does tend to be very bullish in the markets historically, so this should be a pretty strong quarter in the next couple months. So short term, the markets are looking pretty good, and this is a positive catalyst. Alright, moving on to neutral things, or basically other factors to consider, which basically could be taken as positive or negative depending on how you look at it, or which types of stocks and sectors you're looking at. So as we've seen the past couple months, there's been a rotation of money basically from growth stocks and like hyped up sectors and stuff like that, and hype stocks to value stocks. So what this means is that lots of larger cap stocks that have not been growing that much in 2020, especially late 2020 and early 21, are starting to pick up, and people are kind of moving money from the smaller cap stocks that got pretty overvalued, especially in 2020 and the first couple months of 2021. They're basically moving money from all those hyped up stocks like electric vehicles and cannabis and stuff like that to value stocks and stocks that are actually have more accurate representations of the company's value, not just these hyped up sectors and stocks that people were really getting into and pouring money into the past 6 months or so. So this rotation is definitely creating more bullish markets for the S&P 500, because these are the bigger companies that weren't moving as much, and now they are. As we've seen in the past couple weeks, the S&P 500 has just absolutely been destroying new all-time highs and crushing it, while we've seen smaller cap stocks just getting absolutely wrecked. Some of the stocks I've talked about on this channel the past couple weeks have just gotten absolutely destroyed because of this rotation. So this is a factor to consider. It can be positive or negative depending on how you look at it, and for the overall markets, it kind of depends, but I would say it is more of a positive catalyst, at least for the S&P 500 and the larger cap stocks, since more people are putting money into those, and those are kind of growing more right now. Alright, now we're going to take a look at some of the negative catalysts and bearish cases for the market for this year, short term and kind of longer term throughout 2021. These are all things to consider, and some pretty serious factors that could have pretty detrimental effects on stocks and stock market as a whole. And it wouldn't be fair to make a video like this and only look at the positive factors, so we have to consider the whole picture. Okay, so the first thing to consider is that interest rates are rising as of now, and this isn't a bad thing in the long term because they were so low, but they are rising, and what this means is that this basically reduces consumer and business spending. So there's going to be less circulation of money, and whenever there's less spending in the economy, the stock market is obviously going to move slower, and stocks are not going to grow as much. When interest rates are rising, stock market does tend to not do as well, especially because there is some more fear in the market, and there is also an inverse relationship between rising interest rates and inflation. I'll explain that in a second. But yeah, so number one, that is definitely something to consider. Okay, so the second factor to consider is that we might be in a bubble. Lots of people are talking about this. There's lots of articles being written and pretty reliable analysts and investors saying that we are in a bubble and it's going to crash due to the massive bull market throughout 2020 and early 2021. And so people are scared of inflation and this bubble popping. And personally, I don't really see this happening. until maybe 2022, if at all. I'm not going to talk about that or cover that in this video, but at least for 2021, I don't see this happening. Just based on all the positive factors I've gone over and all the money pouring into the economy, which long-term, yes, inflation will probably be an issue and we could see some sort of bubble pop later on. But for 2021, personally, I don't see that happening. Again, I'm not a financial advisor. These are just my opinions. So, do your own due diligence and make your own convictions on what you think is going to happen. But this is something to consider, that we could be in a bubble and inflation will rise dramatically due to all the money that the Fed has been printing this year and will be printing under Biden's $2 trillion stimulus package. Also, just as I said earlier, basically to clarify, interest rates and inflation typically have an inverse relationship. So when interest rates are rising, inflation normally goes down. And so when interest rates are rising, normally stocks do not perform as well. Normally the economy is not doing as well or growing as much. And that means inflation is not as high. And then vice versa. When inflation is rising, the economy is booming and the stocks are surging, the stock market is going up. This typically means that interest rates are going down. So the cost of borrowing is basically less. And so you can see it kind of makes sense. It's pretty logical. When the cost of borrowing goes down, people borrow more money and therefore spend more money. The cycle that happens in economics with the inflow and outflow of money and how this relationship kind of occurs. I hope you take everything I said into consideration, all the positive factors, negative factors, and just other things to consider, the neutral factors. So yeah, remember to go into every trade with a plan. Really know why you're going into any stock, why you're trading it. Are you trading it short term, long term? Are you going in because of technicals, fundamentals? Do you believe in the company? Basically have a plan whenever you're investing in any stock. Always hold some part of your account in cash as buying power in case there is a dip. I've learned this is so important, because when you have all your money in stocks and the stocks dip, you don't have any money to pour back into them. So always hold some part of your account in cash. This is what I recommend. Anywhere from 5 to 10% I think would be fantastic, especially for a long-term account. And just be patient. No one exactly knows where the markets are headed, so be patient with your investing and don't rush out of any trades without doing your due diligence. Again, I just want to remind you, I know lots of these videos on YouTube can kind of scare you and thinking, oh my god, the markets are going to crash, or I don't know what's going to happen. And remember, long-term, it is pretty safe to say that the U.S. economy is not going to collapse anytime soon. Stock market in general, the S&P 500, has been going up for the past however many years. We're not going to see some collapse of the economy, so if you hold long enough, theoretically, you should be in the green eventually, but don't hold a dying play. Make sure you are taking profits and cutting losses if you need to. So yeah, that's going to be it for this video. I really hope you guys enjoyed. I hope you guys learned something. Make sure to drop a like on this video. It really helps me out. Make sure to subscribe to see more videos like this and my top stocks every single week. And with that, I hope you guys have a great week and a green week in the stock market. Peace.